Welcome to After Hours Action on the Street. I'm Greg Greenberg in New York, and we've got a slew of earnings on tap with reports from eBay and Amex just out moments ago. We'll get to those numbers in a minute. But first, here's a quick look at the closing numbers from trading today. Stocks rallied Wednesday after the Senate announced a last-minute agreement to avoid a U.S. default and reopen the government. Good for them. Senate leaders completed the agreement following a 16-day government shutdown. Both the Senate and the House will vote tonight to seal the deal. The Dow rose 205 points, the S&P 24, and the NAS 45 on the celebratory news that our government will soon be working by and for the people once again. As for commodities, oil futures climbed back above $102 a barrel Wednesday after closing at a more than a 3-month low a day earlier. Black gold rallied on the news that the U.S. government would soon raise the debt ceiling and pay its bills. As for yellow gold, that was up $7 to $12.80. Our top story at this hour, shares of eBay are lower after the company posted 64 cents a share in earnings, a penny better than street estimates. Revenue at the online auction house came in slightly lower, but its fourth quarter guidance is really hurting the stock. It's down 5% at last check. Similarly, IBM's booming cloud business helped Big Blue beat street profit estimates. IBM reported $3.99 a share, 3 cents better than expected, but the tech giant missed on the top line, and that's sending the stock lower in after hours by 6%. On the other hand, shares of American Express are higher in extended trading after Amex posted third quarter earnings of $1.25 a share. That's 3 cents better than analyst estimates. Revenue came in at $8.3 billion, also beating consensus, helping Amex beat the street, improving credit trends with card member spending up 7% for the quarter. Aside from American Express, it was a big day for financial stocks with some huge asset managers in the spotlight. Let's talk a little bit about BlackRock. Shares of the money management giant said its third quarter profit grew 15% amid strong global demand. Shares climbed 2.5% today. Let's talk a little bit about Bank of America too. That stock was up 2% after it reported a third quarter profit of $2.5 billion, up from $340 million last year. Strong lending helped lead the way at B of A. However, there were negatives in the third quarter, including higher than expected expenses and a 71% slide in mortgage income as higher interest rates made refinancing less attractive. And speaking of financials, all that gridlock in Washington is driving investors crazy. Just look at the averages this week racing up and down in reaction to the latest budget deal or non-deal. People simply don't know what to do, and they are asking their financial advisors for guidance. Here to hopefully answer those questions on the minds of many individual investors is Scott Hanson. He's the he's also the co-CEO of Hanson, McClain Advisors. Welcome, Scott.
Thanks, Greg. Glad to be here.
Well, it's good to have you because people have a lot of questions. What are the biggest questions your clients are asking you right now?
Well, right now, it's interesting. A week or so ago, people really weren't that worried about the budget crisis and hitting the ceiling and all that. In the last few days, there's been a change because I think most people didn't think we'd get to this point, right? And so we believe there's a deal. Maybe there's not a deal. I think we'll all really believe it when we see something signed, right? So right now, I think investors are saying, what happens if the government hits this? And let's say we have a deal that just pushes this out a couple months from now. We're back here in January, February, the same issue. If Congress can't seem to get their act together and do something about this, what's going to happen if we have some partial default on something, and what ripple effects is that going to have, and what damage will that have on the economy, which will lead to a destruction of values of equities, per se?
Well, clearly people are freaking out, for lack of a better term, on a day-to-day basis. But what should they be thinking about for the long term? Let's talk about the retirement savings. What's the best thing they could do for their retirement savings right now?
Yeah, the best thing, obviously, not try to react on this news, right? If you're trying to buy today and sell tomorrow, you're going to get it wrong eventually, and it's going to blow you up. So I think most investors is really a couple things. One, matching your portfolio, your retirement portfolio, with your true investment horizon. So, let's say you're 55 years old and you plan on retiring another 10 years from now. You've got 10 plus years before you're going to need those dollars. And even when you retire, you're going to probably just take a little bit of income off them. So you need to focus on kind of the longer term and not be so reactionary on the day-to-day basis. But then again, if you're about ready to retire and you're going to pull a chunk out to pay off a house or something like that, well, you're going to have a shorter term time horizon. So I think that's really the first thing. And secondly, it's just really how much appetite you have for risk. If you found that you pulled out of the market back in '08 and recently got back in the last couple of years, well, don't kid yourself. Next time you have a pullback, you're probably going to yank your money out again. So get to understand yourself and invest accordingly.
And you not only help your clients navigate these troubled waters, these choppy waters, but you also help other financial advisors as well, and even wrote a book called Investment Advisor Marketing, where you help a lot of other financial advisors. What's the best advice you have right now for other stockbrokers out there, other financial advisors to help grow their business, especially when people don't want to be involved in the stock market anymore. They got burned in the tech bubble. They got burned in the housing bubble. So now they're hearing pitches from financial advisors, and individual investors are saying, forget it, I don't want to hear it anymore.
Well, I think picking stocks is not the answer to having financial security and having financial independence. A good investment advisor, good wealth manager is one that's going to take everything into consideration, not just your investment portfolio, but also what you've got as far as debt, what do you owe on the house, you got the kids' college costs, maybe you're taking care of mom, all those other issues. Take all those things into consideration and really have an asset allocation designed to, regardless of what storms may come, financial storms may come, and they will come, and they're going to look different next time, to be prepared for those in advance to be able to manage through that. And I truly believe, Greg, that those individuals that work with quality investment advisors, quality financial advisors, do better. Studies have shown they do better, and I think they do better. And that's why one of the reasons I wrote this book, I'd like to see good quality advisors be good at marketing themselves so they can attract people to help more individuals plan for retirement and have some financial independence in their life.
Well, all right, Scott Hanson, thanks for coming on.
Good to be.
Excellent book. Big day on Wall Street. And thank you for watching After Hours on the Street. Please come back.